time for our 360 round, and we're talking all about GameStop and meme stocks and the trades that come along with it. Maybe some excitement, but maybe some woes at the same time. Dave Mazza is with us, CEO at Round Hill Investments, and David Traynor, CEO at New Constructs. Thank you both for being here. David Traynor, some of your thoughts here. The big picture, I mean, right now, GameStop's up about 9%. Some of your thoughts on the quarter?
Look, it's good to see GameStop actually, produce a little bit of show some life on the top line, but we're still seeing negative margins from this business when you adjust out for all the unusual items. There's a tremendous amount of debt overhang. We continue to believe the stock has a bigger chance of going to zero than it does of maintaining its current performance.
So it has a better chance of going to zero than maintaining its current performance. I mean, it has gone from $10 to $30, right, this year from April till now. I mean, you had a few real spikes, but what are your thoughts here as you take a look, Dave?
Well, it's interesting. We think of these meme stocks as really meme stocks, and they're fun to trade. But at the end of the day, they're companies and they're businesses. And in the case of GameStop, we're not seeing a lot of transformation that we've talked about, right? And so we have revenues down 20% year over year. That's in the back of being down 9% the quarter 1 year ago. So we're not seeing a lot of momentum in the underlying business. Now, with that being said, they have been able to raise a significant amount of capital. They've raised equity. They did come out and say that they weren't raising again, which is probably a boost for the stock. But until we actually really see, I think, some momentum in the underlying business, it's going to be hard to see GME kind of continue to rally consistently.
Yeah, and we think about meme stocks, and this really started in 2021. There was a lot of excitement, and people were doing this. You're actually saying that you think that even Roaring Kitty has less influence now than he used to. I want to hear both your thoughts on this. We think about the tendies, right, like chicken tenders, or what the profits that people got on just on September 6th. We saw a post, and I saw there was one options trade that made $550,000. One trade. Pretty exciting. I mean, wouldn't you love to make that? But it's very risky. You think, Dave Mazza, that you don't think he has the same movement after his posts?
Yeah, so we actually did a study, and we looked at every time he's posted on, at least on Twitter or now X, to see the impact on the stock.
Right.
And what we've seen is that most recently, basically the performance on those days on the upside has been more muted. So we've seen days where upside was 70%, 60%. More recently, it's been 5, 6. So he certainly plays a role still, because those folks that are chasing the tendies, as you say, are still believe in the Roaring Kitty phenomenon, but its impact on the name has lessened, I think, as these meme traders has moved on to other memes or other stocks in general.
It's a lot of fun for the folks that are fully involved. They want something to go to the moon, right? Whether you have diamond hands or paper hands, right? Are you going to hold on to it? But some of these other names that have come into play, I mean, you could put the DJT maybe in there, AMC, BlackBerry, Netflix, Palantir, Coinbase, SoFi. I don't know if you think those are all, David Traynor, names that are meme stocks, but they have been referred to as such in articles. I mean, as far as GameStop, you make the point here that you think it's probably more likely to go to zero than go anywhere else. They are not transforming to digital. They're certainly not selling games, right? Hard gameware. They're trying to do cards, trading cards, and made a deal recently with a collections kind of company, sports collectors company. But are they really redefining themselves? I mean, Netflix used to send us a video, but Netflix redefined itself. It became a streaming behemoth.
No, I like what Dave had to say about the lack of the transformation needed to justify the valuation. And I do think that this meme stock story is losing its luster. And I think there are other more exciting meme stocks. I mean, you can even make a case that in some ways, the way we've seen Berkshire Hathaway and some of these Mag 7 stocks move, that they're the new meme stocks. And the advantage that the new meme stocks have over the old meme stocks is that these new meme stocks actually have businesses. And I think the sort of traditional meme stock investor has gotten smarter. If I'm going to gamble on a stock, I might as well gamble on one like NVIDIA. Yeah, it's super expensive, but it makes money. When you're looking at something like GameStop or AMC or some of these original meme stocks, they don't make any money. The risk is much higher. And so I think investors have gotten smarter and said, look, I'm just going to be out there gambling and playing with my money, as meme stocks and meme stock investors are likely to do. Then at least they can put it into a real business. But with GameStop, it's not really a real business. And to Dave's point, and to your point, Nicole, they're struggling to find a way to get some footing, to make some real money. But the bottom line is, I don't think they will, because the space they're in just doesn't really have anywhere close to the cash flow opportunity needed to justify the stock price.
And you did have some other names that you do like if you're going to put your money to work. You said Target and Steel Dynamics and Interactive Brokers were names that you would actually like. Maybe just a quick thought, a few seconds on that. Dave Trainer.
Yeah, I mean, those businesses all make a lot of money. They've got cheap valuations. They're positioned intelligently. They've got a moat around their business, and so that's the kind of investing that we think makes sense at new constructs. We don't like to sort of gamble and invest based on hope. We like to understand the truth about the profitability. We understand valuation relative to that profitability, and when things line up, low expectations compared to cash flows, that's attractive. Low cash flows compared to expectations, that's unattractive. And we're old school. We believe in doing hard work to dig hard and find value. And the fancy, shiny meme stocks don't fall into that bucket.
Right. And Dave Mazza, I mean, you don't think meme stocks are going away. Maybe they're just of less value, or they don't hold as much water, but they're not going away, are they?
Well, I don't think so at all. So I think Dave Trainer's point is a really interesting one, where now I think the meme stock traders have sort of matured, and they've moved up market into different names. Palantir is certainly a legitimate company, but it does trade like a meme. Tesla maybe is the original meme stock before we even dubbed the meme stocks as meme stocks, and we're seeing its behavior most recently post the election kind of go to the moon and meme, plus obviously the back-to-back years of incredible gains on Nvidia. The point is that now traders have a lot of different options to be able to make either a long-term buck in the market, or even a quick buck like we saw folks flying into GME and AMC during the COVID times.
All right, Dave Mazza and David Trainer, thank you both. A good look at GameStop and the rest of the meme stocks today. Much appreciated. Nice to see you both.